really start with your big moment, which is that S&P 500 inclusion. You have been focusing here on expanding your world in financial services. Discover was taken out, you're added in. What does it say about the moment?
Yeah, well, it's a huge moment for crypto to now be in the S&P 500 with Coinbase entering, and it means that crypto is here to stay. People are going to have crypto exposure in all their 401ks, and it points a little bit to, I think, where the future of financial services is going. Crypto is a technology to update the financial system. We actually launched our own index, Coin 50, which is the top 50 crypto assets, market cap weighted, and someday we hope people might actually, feel the same way about getting in the S&P 500 as they do of getting in the Coin 50 index. So it's a great moment.
We were talking a little earlier about eToro's IPO. You see other entrants like that come into public markets. Wondering what it means for you, because eToro is not going to be the only one in terms of entering that crypto versus stocks world. Do you think Coinbase will ever get into traditional way equity trading, or at least tokenized equity trading in a much larger way?
Yeah, well, we think that all asset classes are being tokenized. Crypto, again, it's this technology to update the financial system. That means every company, every fintech, every bank, every payment company, even non-financial service companies are going to be integrating crypto payments. It's kind of like when the internet came out, and first you had .com startups, and then every Fortune 500 company uses the internet. So we think it's going to be very similar. And actually, this is a good thing for Coinbase, because many of these companies, when they come into crypto, they're going to buy our products and services. We actually power crypto custody, trading, payments, especially with stablecoins, which is a big new emerging activity for lots of companies already. And so we're excited about that happening. Now, you specifically asked about tokenized equities. We're excited about those, and we want to lean into the crypto native solutions, not trade traditional securities in the way that many other companies do. We think there's unique advantages to having this come on chain, and so we're excited to explore that. We met with, for instance, the SEC task force on this recently, and there seems to be a general willingness to have these kind of asset classes come on chain now.
Let's stay posted on that front. Of course, there's a big question on how soon that could happen. Now, Brian, stablecoins, because part of the discussion that is looming large in Washington is, of course, that stablecoin bill. Now, I recall a trip I made down to Coinbase's New York offices. I spoke with one of your deputies, Jesse Pollack, and he showed me the way that people are transacting on Coinbase via stablecoin, often at no fee. I'm really wondering, from your perspective, to the extent that when you see a bill passed, how much that could set off stablecoin payments, peer-to-peer payments, in a way that's cheaper than the financial industry does it today.
Yeah, well, you're right. Stablecoin adoption, like USDC, it has grown enormously, and a lot of it's happening on Base, which is a layer 2 solution that Coinbase helped create. So it's a very exciting moment where we're seeing stablecoin adoption. Now, we also need to make sure that this technology gets built here in the US, and that's what this stablecoin bill is really about. It's a historic moment. There's a lot of interest from senators on both sides of the aisle that I've met with today to get this legislation done, and that's what we're here to try and help do. Now, the details matter, and there's bits of language that are being negotiated right up into the last minute, but we're here to try to underscore the urgency of this, and the 52 million Americans who've used crypto really want to see this legislation get passed so that this industry can get built here onshore in America.
Well, you say words matter. What are the words now that you would want to see changed as it hits the final finish line?
Yeah, I mean, there's a couple examples for you. One is that DeFi is something that is separate from financial services. We don't think it should be included in the AML provisions. AML provisions make a lot of sense applied to the centralized intermediaries like exchanges and custodians, things that Coinbase's core business. But DeFi should be excluded from that, and recent language updates we've seen seem to indicate that that's the path they're going on. One other area for you to think about is there are some prohibitions on paying interest and yield in some of the drafts or some of the language that we were made aware of. We think that this is, banks should have to compete on a level playing field with crypto. We think that paying interest and yield to customers is good. It's a consumer benefit. We actually think the American consumers should be able to